Welcome to Profile Traders. This is Reza and you're listening to my market analysis for Friday, December the 12th. I would like to go back a little bit on the daily chart and review a little bit what happened and what we said previously. Previously, as this leg of absolute abusive orgy on the upside was taking place, I warned you day after day after day that there was a total lack of volume. And I also warned you that once this thing was going to unfold, it was going to come down as aggressively as it went up on the previous leg. And I also mentioned that the way we will be putting the top, it is that we are going to come up, retest that high of the 74 area, make a marginal new high, and then I said once we come down and break below 2050, there is really not much that we should encounter before 2000, and here we are at 1992. Obviously we can see that the volume has picked up. Therefore, there is a sync between price and volume coming down. And if you want to ask my opinion, next target it is going to be on the downside 1900, after that 1850. There is absolutely no justification, no fundamental reasons, nothing, not even a single element that justify the market to be at where it is right now. At the bare minimum, this entire leg here will be deleted and erased. So all the projections and all the things I talked about the market has been pretty much materialized to the T. Now when we look at today's action, which was on the previous report, I told you be very careful with 2017. If we do break that, it is a free fall down to 2000. That projection was right as well. Therefore, now we must remain below 2005. As long as we remain below 2005, continuation on the way down, it's the norm. Next target, in my opinion, will be it will be between 1975 to 1970, and then after that 1950. If there are any bounces are all sold. Go listen to my previous recap. I explained to you the cycles of the market and how when you're this late in the game and there's buyers coming into the market, they are the idiots. They are only the idiots that come into this late cycle like they did in the morning. And every time the idiots come in and buy, when their buying is done and there is no more smart money wanting to support the pullbacks, after the buying is finished, you get a complete total reversal and a massacre to the downside, and that's what you pretty much witnessed. So sell the pullbacks is the name of the game. I don't believe the Fed can save it. I don't believe Draghi can save it. I don't believe the Japanese can save it. I don't believe the Chinese can save it. I believe it is due. I believe that the crooks are done with their theft, and now the public will be left to be hanged, and now the public is left to give all the retirement money back to the market. And as usual, the millionaires and the billionaires cashed in, and we are now going to see a shift of wealth from the public pocket through their savings into the pocket of the billionaires who cashed in all the cash and issued a bunch of worthless toilet papers called stocks. Now as the stocks will tumble down, once we're going to see another 2,000-3,000 point drop, well, the billionaires will come back and buy that paper that they sold at $600 and $700 to the public at 200, 300, 100, and then the cycle to the downside will be completed. It's sad. It is sad, but it is how it is. Now for crude. What you are witnessing here, as stated previously, you are no longer in the hand of a rational market reaction. You are in the presence of a full-blown crash. Full-blown. There is no other word for it. And we are now starting to get very close to the end of this, in my opinion, massacre to the downside, because no matter how you look at it, this is not a share of a toilet paper called Amazon, or it is not a piece of toilet paper called Priceline, or it is not a piece of toilet paper called Tesla. This is called crude oil. From the morning you wake up and you use your toothpaste, to the house shoes you put on to go take your shower, to the shampoo that you use in that plastic bottle, to the cornflakes that you eat containing that plastic bag in it. Every item pretty much that we use has oil involved in it. And this is not a commodity that is going to go away. Don't be fooled. These are the times where you talk about oil, people want to poke your eye. It's the black sheep of investment. That's when you start to buy. I am extremely bullish on oil off of these levels, looking for a minimum $4 to $5 rally. Enough is enough. We know how these scumbags operate. This is their footprint, okay? This is their footprint. It's either they crash something to the level never seen before, or they explode something to levels never seen before. And as this crap ES is now turning back down to hopefully crash into dust, the same way you are going to see one of these good mornings, a turnaround in crude, 4, 5, 6 points rally, where every single idiot, every single dumb idiot that has a great genius idea to come and short crude oil fresh at 57.5 after it has dropped from 102, 103, will get caught and will get punished. I would no longer touch a single contract on the sell side off of these levels. It is getting very, 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 very depleted and a very cheap asset compared to how much use we have for it. So the discussions that we had before, which was when crude was crashing and the market was going up and I was screaming out of my lungs that this crashing crude based on a economic slowdown doesn't reflect this rally bogus BS in the equity market. Now finally, equity market is catching up with the reality, and the reality is more into crude than it is in the paper market. The crude market told us that the economic slowdown around the globe is so significant that it surprised everybody, and therefore a whole combination of oversupply, rallying of the dollar, blah 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 blah, made crude crash. If that's the case, market had no business to be at record high, and now it is responding. So be very careful that the response of the market could be quiet, nasty and dramatic, because the market has ignored and ignored and ignored every single item of negativity that has been out there. And if there is a catch up to be done, it is going to be quiet, severe. Now, downside, I very much so that it is going to be very difficult and limited to push these things further from these levels. I am expecting a very strong bounce Monday and Sunday night, but we will see. We will see. Downside, I do not know, but all I know is that now resistance number 1 is 58.2. Resistance number 2 will become 58.65, and then if we pass through that, we are coming to 59.16. Now, as for gold, it is holding still in this consolidation. Every time now they push it down, there is reaction. The buyer comes in and defends it. To make a long story short, the line in the sand is 1200. As long as we remain above 1200, we could still see a little bit of a retracement, but it is now looking again after a big push up, just a tight retracement, and it should then continue back up. My ultimate upside objective in crude is 1280, as long as we remain above 1200 to 1205. If the 1200 is broken, the story will change. Until we remain above 1200, I have no problem that gold should definitely go towards 1280 to 1300. Right now the consolidation is very tight, very narrow. There is no long liquidation coming in. Therefore you can bracket the market from today's high and low and see which side breaks for the next leg. Above 26.6 we should go reach 1240. Below 1214 we should come test 1200. So very clear bracketed market. This was Reza with profiletraders.com. If you wish to learn traditional market profile, check our website. That's what we do. That's what we trade on a daily basis. Have a wonderful weekend. Talk to you next week.